So we are excited to kick off our Impact Investing with the NextGen Private Family Offices. The panel will be moderated by Kate Gardner, founder of Trust Ventures. And joining us on the panel are Taylor Adams, founding partner and CEO of Belief Partners, Mason Angel, associate at Industrious Ventures, and Claiborne Hall, NextGen Investor and Family Office Coordinator. So please welcome our panelists. I'm going to let Kate take it from here.
Thank you so much, Scott. It is such an honor to be a part of this Astor Perkins quarterly series. I participated in a previous one and just think so highly of the impact of this group and its leadership. So I am delighted to welcome three other incredible next-gen investors and philanthropists into this panel together. All four of us have thought a lot about our families and legacy. And I'm really excited that we're getting to enter in at this moment because we think a lot about sustainability, not only in a fiduciary and a philanthropic sense, but in a family narrative capacity. And so I want to encourage everyone a part of this quarterly series to consider not only the excellence that they're bringing to their family office structures and plans, but also to how they're thinking about how they're going to invite the next gen into that, and then cast vision and power all that will come after them to thrive and take their legacy to the next level. So with that, I'm going to begin conversation with Taylor Adams, and Taylor's going to also speak into with some of the incredible expertise he's cultivated, what he's been able to step into and kind of cast vision for where we'll continue to go in this panel. Welcome, Taylor.
Yeah, thank you so much, Kate. Excited to have this conversation with you guys. And I think with starting a conversation about next gen investing, it's important to kind of reframe and highlight some common misconceptions around who and what a next gen is. I think there tends to be this assumption that next gen investors are simply allocators and just writing checks. When it's so much bigger than that. We're really like stewards of a lot of different core capabilities and resources, and oftentimes, financial capital is the least valuable part of the equation. There's also misconceptions around we often frame ourselves as like Gen 1, Gen 2, Gen 3, Gen 4. Just to give you like a little background around the context of our family legacy, you could think of me as Gen 5. My great-great-grandfather, our family ended up operating what was the largest corporation in California to survive the Great Depression. But the family office, the family enterprises looked like they did back then. And in every generation, there's been a new wealth creator, somebody who inventoried the resources, the capabilities, and built something new. And so I think thematically, what we want to talk about today is multi-generational success and the concept called leadership capital, which goes beyond just being a steward of financial capital. And so Kate, let's have a conversation around this framing of, am I Gen 5? Am I Gen 2? What's your perspective on that aspect to next gen?
Thank you, Taylor. And that's just so well said about how we can consider the full picture of what family legacy and stewardship truly means. And so I very much agree. And like you, have a couple different layers of legacy that I am stewarding in various ways. For me, I'm Gen 4 of DeWalt, the tool company. So a very kind of Industrious, which will be one of our themes of this conversation as well, but also Gen 2 of an investment advice company, The Motley Fool. And per your question, one thing I love encouraging other multi-generational family offices to consider is how each generation can really think of themselves as a new Gen 1. I think per your great point about next gen just being seen as capital allocators, that the goal is not only that the finances will thrive, but most of all that the people will thrive. And if that is the case, then I think the finances will follow much more fluidly. And so I definitely, with a lot of the things I'm doing right now, my own venture, my own philanthropic endeavor, my own ministry, my own relationships and networks, that's been a huge deal to me to really consider how can I take the incredible honor of the opportunities I've been given in my own way and really see scale and see impact to a whole new level. And with that, yeah, Taylor, how have you been able to cultivate that mindset of being your own version of NextGen? What's a little bit more of that journey and success come from in your story?
Yeah, well, I think growing up in a multi-generational business-oriented family has exposed me to so much. I mean, just after school, going into the office and watching my father do deals and stuff like that. What it actually created is this kind of unspoken culture of entrepreneurship. And so I want to validate what you said about like every generation should think of themselves as Gen 1. That was never framed, but it's kind of ingrained itself in the culture of our family where entrepreneurship is part of the equation. So I think subconsciously I was always thinking about, kind of like essentially inventorying resources and capabilities and being like, what could that be in the future? And then in my own story, starting off working with the family focused on direct private equity and real estate, I at one point realized, wow, there's a real interesting opportunity to leverage core capabilities, domain expertise, insights in order to originate a venture fund out of the office, and then have it be freestanding and raise outside capital. So it's kind of attached, but it's its own thing that's uniquely mine. And so I think that's one thing that NextGens and people within the investment ecosystem should keep in mind, is that there's always the opportunity to new capabilities and bolt them on to what you have going on existing. And I think what I realized is that there's often a methodology in family office around wealth preservation. I think it's an important part of an overall allocation strategy, but there's unintended consequences. And the risk of wealth preservation is that it's a relatively passive activity from a NextGen standpoint. And when you just focus on wealth preservation, human capital tends to atrophy. And then on the far other end of the spectrum, there's what you could refer to as risk capital, which I definitely spend a lot of time in the risk capital area, where I being an entrepreneur in my 20s and really dedicating my time to singular startups and enterprises. Obviously that carries risk. If things go well, everyone's happy, but when things don't go so well, they can cause tension within the family and conflict. So I think that a really interesting thing is in defining this new category of asset allocation that we call leadership capital. And leadership capital is really about inventorying existing capability sources, the intangibles, the things that aren't cash. You don't see them on a balance sheet. It looks like established networks, domain expertise, and really inventorying that and productizing it into a new capability that can actually turn that what might be a Gen 5 or might be a Gen 2 into a Gen 1. So it's super powerful. And I think that the investment community at large should be aware of that, especially when going to NextGens or family offices, potential LPs. Like, we don't just want to allocate. We want to make our mark on the world and build new capabilities and skill sets that are incredibly impactful. So that actually requires collaboration between NextGens and external fund managers, and taking a more active approach.
Wow, that's so powerful. Absolutely. I love that concept of building a network and really empowering a family to discover and harvest what they already very naturally would build in the different aspects of their stewardship holistically. And I'd love to invite Mason Angel's voice into the conversation as well, because Taylor and Mason have actually been working together, and Mason's been able to really do this, to activate on the principles that we've been talking about in his own way. Would you like to share parts of your story too, Mason?
Sure, love to. Thank you, Kate. So our family background stems from the industrial gas sector, which is pretty much the building block for any manufacturing you want to go about in any capacity. So that's where I started, I guess, this industrial idea and transformation, and then kind of the expansion of that. But just rewinding a little bit, my background is I'm the director of our family office in alternative investments. So I kind of handle all of the one-offs we do. I handle all the private investments we do. And then also I'm the principal at Industrious Ventures, which is part our internal capital invested, and also we have outside capital. So it's open. It's outside open fund, but we kind of nerd it, and we provide our own direct value add from our family on top of that fund. And Industrious Ventures is an early stage fund. We kind of focus on the industrial transformation, innovation that happens within the parameters of what we call legacy industry. And legacy industry, it's a construct. It's nothing specific. We even consider space as a recent legacy industry, just because it was derived from the space race. It was during the Cold War, but these operations that they were launching on weren't changed until the most recent Blue Origin, SpaceX, and ULA. So we look at the lens of it doesn't have to be constrained by time, but usually the operating system is pretty ancient, you could say. A lot of these derive their heritage from the previous industrial revolutions, whether it be the first, second, or even third. So we're trying to kind of layer on the new digitalization that's occurring naturally with all these tools, you could call it, Internet of Things, connectivity, computer vision, and layer onto these legacy industries. And the way we implement this is we go back and we check and we kind of feel the pain points of corporations that are currently growing or of large growth value. So, I won't go into specifics, but kind of the high level captains of industry.
Mason, can I ask you some questions?
Yeah, go ahead.
Yeah, it's I find your story, really, really powerful in that, that there were existing capabilities both at the publicly traded large enterprise side, but also at the family office side, Halo. But you've had your own experience in originating a new franchise that's freestanding in Industrious. Like from the outside perspective, Industrious Ventures, it doesn't look like a family office. It doesn't look like a CVC. It's a freestanding early stage venture fund. Tell me about like the process of franchise origination. Like where does it start in thematic, thesis generation? Where does it go from there?
Yeah, to your point, that was all by design. So, outward facing, we wanted the same persona, we wanted the same, even better, stronger value add that we provide. We didn't want to be necessarily that dumb capital, if you call it, the direct capital that just come for the ride.
Well, that's a great point. Let me just jump in there real quick. Sorry. In venture capital specifically, my perspective is that family offices tend to be treated as second-class citizens. I have a little fun metaphor that offices that do venture think that they're pulling up to the venture capital restaurant and ordering takeout. And what they don't actually realize is they're in back dumpster diving. And so creating a franchise that from outward appearances looks like a true venture fund, but also has the capabilities behind it of not only a robust family office, but also, insights from a large global corporate is incredibly powerful in market. So is that how, in your thematic thesis generation, is that what you really leveraged?
Yes and no. So, the part of that differentiation we were trying to create was separation between, what our previous generations have done, utilizing the tools and gifts and also network effect that they have while creating a totally differentiated product. So how do you, I use the terminology, how do you dip your feet in the past while trying to still go into the future and focus on that? So the differentiation point was critical to us. And then, going along with that narrative, it originated from a thesis that was derived from what we're good at, basically what what our family's done in the past. But the near term and long term future perspective is different. And that's what we can iterate on. And it did start from a thesis, but that thesis is constantly being iterated on and changing and keeping up with the modern times and the development of everything that's occurring at present day, which is quite rapid in the current industrial fourth generation.
Yeah, I think it's really important to have that iterative approach, because just because you know something in a certain area doesn't mean that segment of it is where you should be investing. In real estate, there's a little tidbit of wisdom is like, just because you own a piece of property doesn't mean you should build something on it. And so being willing to iterate on the thematic thesis approach while still being able to leverage core capabilities is super important. So Industrious is not a passive venture investor. There's active strategies, and in that, like, you're involved in value add for portfolio companies. How do you think about that, and what products, what capabilities are you developing to empower portfolio companies?
Yeah, so I think it's key to point out that you really have different capital contributions you can do. It's not just monetary. There's also that generic kind of value add that gets thrown around a lot in venture. This can be introductions or access to qualified employee pools or even the cloud that comes from a reputable VC group. So ours is much more direct in how we kind of constructed this. It's called Industrious Advisory Board, and it's twofold. It's a two-tier system. One of it is focusing on the high-level strategy and trying to welcome in previous titans of industry, CEOs that ran global conglomerates, and also individuals who have the kind of high-level strategy and viewpoint to kind of help new founders grow in their own business models. And then also we have a more direct, vice presidents of product, procurement, manufacturing, and even digitalization. Those individuals who have that even more direct and concentrated pulse on the market, you could say, or pulse on the product. So they're able to kind of say, what are our pain points right now, and what are we looking forward to in the next 2 to 5 years, and whether your product will be of value to us. Some groups large corporations have corporate venture capital arms already, but that's usually reserved for the monopoly, revenue generating large tech companies. So Qualcomm and Microsoft and perhaps Oracle. So, your everyday, John Deere even has a corporate venture group, but it's not as active as any of these large tech corporations. So the idea behind this is we'll fill that middle gap. We'll help them realize the returns that they can generate off their products, and also what is accessible out there at present in the early stage companies.
Yeah, I think that's such a great example of being able to leverage a core capability of an established network, be able to productize, basically build bridges from early stage founders to the highest level of the C-suites out there. And I think that's such an incredible differentiator as an early stage fund, because most early stage managers, especially when you're talking about micro funds, sub $100 million funds, those managers don't necessarily have the bandwidth to focus on building kind of a industry advisory board that consists of high-level corporate executives at the companies that your portfolio companies want to partner with and contract with. So what a great example of building leveraging existing resources to create new capabilities that provide opportunity to invest, not just passively, but in an active way where you're actually contributing. So I think that's super awesome.
Perfect.
Yeah, go ahead. I was going to say, Kate, oftentimes, next gens don't actually have the opportunity to go into family operating businesses. I know for me that I throughout my 20s, I did a rotation through our office and different family enterprises. But a lot of times, there's just really not a pathway to leadership within that context. I think that might be part of your story a little bit, Kate, is you by necessity, you have to build something that's basically a bolt-on. And Mason, that's definitely the case for your family. There's just really not much access to join a publicly traded company as a next generation leader.
Why would I want to do that, Taylor?
I know it sounds horrible.
That's a great point, Taylor. And I think the amount of vision that you and Mason have been able to cast, and that network, I think again that whole redefinition capital, which I think is going to be such a key that this panel carries. And I think how it, impact investing as a whole sector now, that's so much of why people associate it with the next gen is this idea of meaning, so much deeper than just a financial return. You really want to make a difference. And so the intentionality that I think that the next gen can bring, and something I know, Taylor, you've said before, it's really stuck with me, is this idea that next gen, not even needing a title, can have, very unique opportunity to kind of build this new capacity and take new ground while also leaning into the legacy that they've been born into, perhaps. And Claiborne has been an incredible example of stepping into that as well. Claiborne has been on a mission with her family to inventory where they are and where they're headed. And so I'd love to invite you, Clay, to your voice into what you've seen as a very a growing expert next gen in this world as well.
Yeah, thanks, Kate. Yeah, it's very much, I love hearing Taylor's story. I love hearing Mason's story. I love hearing your story. I think I'm on the phase right before a lot of those segments of where you all are. I really see myself kind of under the surface, under the ground, doing the inventorying. What's present? What are the physical assets that are there? What is liquid? What is not liquid? What are we tied to? What then, like Taylor was saying, what then is the relational or social and leadership capital that's present that doesn't really have a plan of succession at this point? And what are things that are just out there that no one is really coming together? I like this phrase of kind of duct tape and chicken wiring all of that together so that it can even get to that point of productization, and then moving to the next generation of being a Gen 1 to obviously continue the wealth and preservation of that. So I am a fourth generation in one of the last family-owned and privately crushed stone aggregates companies. And with that, as far as where the wealth is and the assets are held more in stone and a resource and land. And so what does it look like to take that and actually create something, where are we going from that? So taking the silos, taking the assets out of the silos, and then getting a vision for what's next. So going through a lot of, we're from an established family office and then coming out and kind of creating a new family office outside of the operating company in order to redefine what the next generation's mission, vision, and values are. So going through that work with different consultants and a team around us. And then along with that, really picking the brains of the current leaders within the operating company and digging through all the things that they've never had a chance to really impart to the next generation, and taking the time to document a lot of that, figure out who are the players, and then who are the ones that are gonna go into the next generation, even though that current Gen 3 is still in leadership and operating the companies. So yeah,
Clay,
really,
I'm curious, in multi-generational families, my experience is that assets and capabilities tend to become kind of siloed, and they separate a little bit. Like I imagine the conversations that you're having with leadership at the core operating business, they don't have total coverage of everything that the family has and does. And there might not be, over time, there might be gaps in having a leader that really has that broad coverage and can be the connective tissue across everything. And I think also I'd be curious your opinion on how multi-layered it is. You have the interest and incentive structure of core leadership, but you also have family members, and that creates a new dynamic. How are you navigating that? Do you speak with not only the business leaders, but also family leaders or family members that also have an interest?
Yeah, definitely. It's something I've had monthly meetings with the operating CEO, who's my uncle, actually for the past 3 years, monthly basis, and shadowing him in a lot of different capacities. And I've told him that I'm documenting all the things that he's wanted to impart to even some of the other cousins, nieces, and nephews that he doesn't speak to on a regular basis, and becoming that advocate for the cousins and for that next generation that might not have that access or haven't asked for that, and to try and distill that information, being the one that people kind of come to, of hey, this is happening in the family, let's go, who do we talk to about this? I end up being that person, and trying to spread between the two generations, like a bridge between the two generations, but then also the one that can kind of bring my generation together, and even having the generation above us seeing wow, they do cousins weekends on a biannual basis. Oh, we never did that. Things like that, maintaining the relationship. I think will be a jump starter to what the Capitol will be an influence in the future.
Well, I just want to do a quick time check. We have about a minute left. Let's see if there are any questions. If you have a question, please go ahead and click on raise hand icon on the right. And in the meantime, I'm going to give it back to Kate again in terms of just a quick wrap up here.
Absolutely. Well, this has been a fantastic conversation. So grateful to everyone on this panel, not only for sharing with us today, but honestly, the lives you each are living and the way that these teams of network coordination, even documentation, great piece that Claiborne just brought up. And this idea of redefining next gen, of seeing how no matter what G you are, you can become that G-win mindset and take the excellence both of the financial stewardship as well as that idea of unique legacy discernment and passing on can continue. So thank you again, Scott, for having us, and just so encouraged by all the wisdom and positive momentum in this space.
Thank you so much for joining.
Thank you.